I'm joined in the studio now by Ross Dawson, futurist and technology expert and former broker. Well, what better person to ask about this? Can't wait for their marketing campaign with a distribution network like Facebook. But 8 to 10 billion is a lot to get away when you think of the sort of slightly ordinary floats of Zynga and Groupon.
Yes, well, it's interesting. Currently, the valuation on the secondary market is 80 billion. However, there's this pent-up demand from consumers who pretty much all know what Facebook is, and quite a few of them see that there's a potential for Facebook to be the big thing, the thing which controls our online future. So I think that $10 billion is a lot for an amount to raise, but I think it's quite viable to be able to raise that.
Even in this market this year?
I believe so, because the markets go up and down, yet people are looking for what transcends the ups and downs of the markets. And technology and the whole shift to all business having an online component is something which I believe people will look to and say, Facebook offers that potential. I don't want to invest in these cyclical retail stock, for example. I'll put them where I see the opportunity.
Well, now, Ross, I think it was Wallace Simpson who said you could never be too rich or too thin. Where will this leave founder Mark Zuckerberg? Because he's already worth about 17 billion, isn't he?
He owns 24% of the company, so that would, $20 billion is healthy, even if it's a little bit behind Bill Gates. But it's Mark Zuckerberg is obviously, his ambition is obviously fairly obvious, but he wants to grow far beyond this. He sees that this is a beginning. He's been holding off doing an IPO. He wants to keep it as private as possible. Now, this is the time when basically they've reached a trigger point with enough shareholders where they have to go public. And this is now an opportunity to raise $10 billion, and that will fund the growth of the company moving forward.
How is it going to go against Google? Because Google had ad revenue last year of more than 5 times, I gather, what Facebook is expected to get in 2013. And Google, on the other hand, is building a rival social network called Plus. Is the world big enough for both of them?
Yes, they are. I think one of the big questions is the degree to which Google Plus can really use Google's clout to be able to make inroads.
It's a punt on the future, isn't it, this float?
Absolutely. Well, it's also to raise the money in order to be able to create the future, and that's what they need the cash in order to be able to grow, to meet their ambitions.
Well, one other company who does want to own the future, of course, is Apple, and we heard last week about that mighty $100 billion cash pile they've got in the bank. The business back office has been putting a bit of thought into what you could do with $100 billion in cash. You could pay Greece's debt bills for 2 years, not very satisfying. You could buy Facebook outright. You could have about 270 new A380s, presumably with wings that aren't cracked. You could easily set up a foundation that would dwarf Belinda and Bill Gates. Or, the boring option, you could, of course, consider returning a big chunk of the cash to shareholders. Now, do you think that's what they will end up doing?
Part of the problem is that around 60 billion or more of that money is overseas, so they can't repatriate that into the United States without incurring tax penalties. But they are really looking at making strategic investments. I think that can be partly in consolidating the supply chain, for example, dominating supply of various components to the expense of their competitors, or indeed making other acquisitions which will grow the company. They're not really the type of founders or companies that like giving money back to shareholders, though they might be forced to give back part of that.
There's that big emphasis on research as well. But I was just looking at the other story, last week, which is poor old BlackBerry and Research in Motion. Apple's profits last quarter were 13.1 billion, twice Research in Motion's revenue of 5.2 billion. What future for BlackBerry?
Pretty dim, to be frank, because they did not reposition when they should have some years ago. They thought the Playbook, which was their iPad copy, would do well, and it hasn't. And now they seem to believe that doing the same things will save them, and they won't. They must change dramatically, and they're not. So I think the future looks dim for Research in Motion.
Dear oh dear. Ross Dawson, thank you very much for joining us.
My pleasure.